Hey, and welcome back. Another episode of Go FUD Yourself. And today I'm joined with a good friend, Patrick. How you doing, buddy?
Pretty good, man. How are you?
Living the dream. Living the dream. Market's exciting. We got a lot to talk about today. Some BTC and ETH day today. I've got crypto arms race up in the corner. Not sure why. That's Thursday. For anybody that's watching, if you're wondering why we're slightly less organized today, Ceara's not here. So when the cat is away, the mice will play. And if I'm left to my own devices to plan this stuff, well, we'll see what happens. But anyways, today we are talking about a whole bunch of stuff, but in no particular order of importance. We're talking about the last 24 hours of the Bitcoin dip. We're going to talk, well, actually, we're going to talk a little bit about that. And also with respect to interest rates. We're going to talk a little bit about some Solana liquidations and some meme coin dumps, which is always interesting. And we're going to talk about some Tether acquisition of some Bitcoin. We're going to talk a little bit about a $300 billion crypto ETF price crash. Oh man, there's a lot to talk about. Over 200 million has been liquidated from the crypto market in the last 4 hours. So today we're seeing some choppiness. At the last couple of weeks, it's been kind of rainbows and unicorns, and everybody's been holding hands and singing Kumbaya. And now we're forced to face the realities of the space and investing in general and how things work. So hopefully we can help share some insight and love on that. Patrick, just before we jump into our video, do you want to give a quick blurb, who you are, what's Ceara Markets, and why people should check you out?
Yeah, Patrick Kiefer. I'm a PhD economist turned software developer and builder. Everyone should check out our Twitter at Ceara Markets. We just have released a bunch of announcements over the last couple of weeks regarding some of our tech innovations, but also regarding our Series A raise. So go check us out at Ceara Markets. A lot going on over there.
It's one of the most amazing options protocols just launched on Avalanche. A lot of sophistication, research, and effort has gone into it. So if you're looking for an options platform, Ceara is the place to go. All right. I think we can just freaking go. All right, we're back. What do you think of the new vid? You've seen it a few times, eh?
I like it. I think you guys have new jams each time. I like the variety. Sometimes it's punk rock.
Yeah, we've got a punk rock one. We've got like a kind of hip hop one. Yeah, we've got some cool design people that like to make videos and music for us. Anyways, all right. So first, Patrick. Obviously, if you've been paying attention today, Bitcoin's price has fallen below 66,000 in the last 24 hours. It's at about 65,000 now. So roughly an 8% drop over the week, ahead of the fourth halving event in 18 days. The market anticipates the Federal Reserve's decision on interest rates, which historically affects risk assets like Bitcoin, to influence the decline. But despite the decline, the trading volume increased by 40% to 141 billion, with Bitcoin accounting for 41 billion of that trade volume. In conjunction with significant liquidations, 135 million in BTC long positions were liquidated, and a total of 449 million of long positions across the crypto market were liquidated. We talk a lot, Patrick, both you and I and on the pod, about trying to stay objective about market movements and sentiment and momentum and all of these things. What do you think about this? Is this something that was kind of expected in your mind and people just get too excited and forget about it? Or what are your thoughts on this?
Yeah, I mean, I don't know if I expected it, but it was a high enough probability that I'm not surprised. It's the type of thing in crypto we can anticipate. These big moves obviously are common in both directions. I think it's important to keep in mind how up we are. We're still way up. I mean, we were down for years. Bitcoin was hovering around 20K for a long time. So, it's brutal to see it drop, whatever 10% in a day or two. But things are still way up. I'm not surprised by these moves, and I don't think it's nearly enough to constitute like a reversal of kind of the bullish sentiment. I think these moves are common. I do think the interest rates are going, expectations about interest rates are going to affect crypto more than stocks. And so if you see stocks, especially, and within stocks, they're going to affect tech stocks more than, blue chip stocks. So you're going to see this kind of stratification in terms of how exposed risky assets are to news about interest rates. And so I think that's a big factor here. I mean, one thing I learned looking at stock markets over the years is frankly the Federal Reserve policy expectations about interest rates are the principal order driver of price variation. It's the most important thing.
It's kind of crazy. It's actually kind of crazy.
It's crazy. Yeah.
Interest rates, inflation, like they're like the tail that wags the entire dog. It's crazy.
Yeah. But if you think about it, it's just mechanical, right? Stocks are just discounted cash flows. And so if the interest rate goes up, you're gonna value those future cash flows less. And if you think of crypto as kind of riskier versions of assets like that, then the logic carries through. Frankly, I think the connection isn't perfectly understood. I mean, a lot of these crypto assets, you can't write out their value in terms of a cash flow equation. So, there's a question of exactly where the interest rate shows up in that valuation expression for crypto. But if you think of it as, essentially a riskier tech stock, then all the logic carries through, and that explains a lot of these big moves. I also think
essentially that's like a leveraged. It's just like a leveraged tech stock. So whatever's happening to tech stocks, just assume it's going to be more violent in crypto.
Exactly. And I go ahead.
No, go ahead.
I was just going to say, I mean, sometimes you also get crypto specific news, and then you don't see stocks moving. You don't see news about interest rates, but just crypto dumps. So if you see an announcement from the SEC or something, I'm not sure if we saw anything like that over the last couple of days. I also think Bitcoin is kind of Bitcoin in particular is kind of in the clear in terms of regulatory risk, more so than other crypto, at least. But I didn't see anything in the last few days about the regulations, but I could have missed something. So my guess is this is mostly just responses to changes in expectations about interest rates, and we're still way up.
Yeah, absolutely. So something we talk about on the pod quite a bit is trying to create or trying to remove emotion from your trading strategy or your approach to the market. So the people that are really panicking about this particular drop are the people that bought completely on FOMO, generally speaking. So they're the people that didn't buy Bitcoin, didn't dollar cost average, didn't do anything, but bought Bitcoin at 70K because Twitter said they should. And now they're like, oh crap, everybody else said it was going to go up straight line forever. And now I'm down money, panic ensues. So this, again, just further validates my point, which I think doesn't necessarily need validation anymore. But dollar cost average and time in the market are the two most important variables, in my opinion, from finding success in trading and investing and participating in crypto. The longer that you can stay in the market and the more opportunities that you have to earn returns, that's the key to long-term success. Buffett will tell you the same thing. Any well-respected investor will tell you the same thing. In this particular case, Patrick, what does the excessive liquidations tell you?
So it's hard for me to gauge whether those were excessive liquidations. So if the market drops 10%, what number of millions of dollars of liquidations would we expect to see? What's our benchmark? I don't know. So it's hard for me to say that they're excessive. Those numbers were large, so it tells me that there were a substantial number of people who had leveraged positions who expected it was going to keep going up at the rate that it was going up. So, I mean, that's what it tells me. It's hard for me to gauge whether the number of people who had leveraged exposure that led to those numbers we saw about liquidation, like you said, in the range of 400 million or something. It's hard for me to say that that's high relative to another period when we have a 10% drop.
Fair enough. Leave it to the damn economists to get technical about it. But a very, very valid point. I think what it tells me is, I don't know if it's different than normal or greater than normal, but what it tells me is there's a lot of people using excessive leverage in a single direction in the market where, we've been talking about this for years. It's something that there's been a lot of accusations towards centralized exchanges and different centralized parties about manipulation of pricing due to open interest in perps, and forced liquidations, and the way that the price of these assets are aggregated across many different venues does leave vectors for manipulation. People often wonder, it's a multiple $1 trillion market. How can we see such volumes and such price movements so violently with that much liquidity and capitalization? And the answer is just the mechanics of how those prices are aggregated. So hopefully we didn't see any of that. Hopefully we're not seeing any manipulation. I suspect there's probably a lot less likeliness of that now, just because the SEC is paying very close attention, more so now than ever before. And I think CZ and many of the other kind of centralized actors are under the microscope. So hopefully it's more legitimate. But what this tells me, and what my advice is to everybody else, is just be careful. I mean, you're playing with fire in one hand, and in the other hand, you're holding a can of gasoline. So just be careful. If you add leverage, you're you're really going crazy. Okay, one final thing that I thought was really cool about this, silver lining maybe. Everybody's talking about interest rates going up being so crappy. Right now, 10-year U.S. Treasuries reached the highest level of the year. And as a consequence of that, obviously we saw that the price of Bitcoin and others declined. The silver lining here is that you can buy treasuries on chain now. And what's cool about high yield treasuries, given their risk profile, is we can build really cool structured products in the space, and really cool tranched products and different things based on these real yield based assets. And although I don't like to see the economy struggle and interest rates have to be increased, the one silver lining is we do have some 10-year bonds with which we can build pretty good real yield as a base yield. So maybe I'm just trying to look for some shimmer of silver lining. But do you think that's impactful, or does it do more harm than good?
I think I'm kind of indifferent. I want to make a point about the liquidate. Just real quick, I want to make another point about the liquidations.
Yeah.
When you were saying, it's a very interesting question why once you have all of these ETF flows, you have all of this, institutional money in Bitcoin. It's surprising that you can still see these kind of like 10% moves in a day. But I think what you were also saying is that the dollar liquidations for Bitcoin were lower. So the Bitcoin number was around 100 million in terms of liquidations. And then the other ones, when you added up the altcoins, it was like 400 and something. Is that correct?
Yeah. So Bitcoin liquidations was 135 million, and total liquidations was 449 million.
Yeah, so that's really interesting. So even though Bitcoin saw this big 10% move, the dollar amount of liquidations, like think of the dollar amount of liquidated positions as a fraction of the total market cap. It's going to be much smaller for Bitcoin. So we do, and maybe that's a sign of a maturing financial market for Bitcoin. So we still see these big swings in Bitcoin, which I agree are kind of surprising to see. But my guess is we see a much lower fraction of people taking these huge risky leverage bets on Bitcoin relative to these other coins. So if you look at the dollar amount of liquidations relative to like the market cap of the coin, Bitcoin is going to be lower than the rest. And then you're going to look at Solana and you're going to see much, much higher numbers there. And so that's maybe an interesting metric for kind of the relative maturity of these markets. To your point about on-chain treasuries, I don't know if the volumes are significant enough there to kind of move the needle, but of course, I like to see more and more of that come on chain. I think, we spoke recently Maple has on-chain treasuries available for, eligible US users. And so we're seeing more and more. There's a few other companies that are doing this. So I think that's definitely the right direction to your question, but I'm not sure that moves the needle on any of this at this point.
Yeah, I mean, you kind of left some breadcrumbs and a nice segue, I think, to Solana. But I mean, assuming that I agree, which I do, that as a percentage of total market cap, yeah, it's a big number, 140 million, but 140 million out of 1.5 trillion is, a rounding error. So it is excessive. It is a lot of capital lost in the market, which totally sucks. But probably from a Bitcoin perspective, to your point, much less of a problem than it is for things like Solana. So as an example on Solana and other meme coins, major cryptocurrencies experienced a significant drop with over 400 million in bullish bets being liquidated. Bitcoin, Ether, Cardano's, ADA, and BNB all saw losses around 5%. Solana dropped 7%, and Doge fell over 8%. Bitcoin Cash dropped 10% amid a profit taking after a 40% rally. And analysts expect Bitcoin to remain range-bound in the coming weeks, with long-term investors selling off holdings. The CoinDesk 20 index, tracking major tokens minus stablecoins, slumped over 5%. Lots of liquidations, lots of declines in value on all of these altcoins, usually, again, a magnified version of what's happening with Bitcoin and ETH, usually. Do you think that these alt ecosystems are exposed to a greater extent to liquidation manipulation and these types of things, Patrick, or is it just to be expected?
My sense is that they are more exposed to manipulation. Solana, I feel like, is probably still too big to, it's not that easy to manipulate. Now, I guess there's also a question with Solana in terms of like concentration of holdings. So I think, there's a lot of Solana out there. The market cap is high, but, what are the number of wallets that hold, say, the 80%? My guess is there's a fair amount of concentration there, and so that might make manipulation easier. But my sense is it's still hard on Solana because of how big it is. But as you go further out into the tail coins, obviously more manipulation is easier and easier. And so if you see really large movements and really large liquidations on tail coins, on some of these meme coins, I think manipulation is a plausible explanation at that point. It's not a good look, frankly, for the space, if you ask me.
Not at all. I'd like to believe we do a few things still that I'm embarrassed to be a part of as a space. Some of the meme nonsense is part of it. There's a few things I don't like to tell everybody that the space does that we're a part of. But manipulations here, I'm not sure. As I said before with Bitcoin, I think manipulations of all tokens, coins, and assets are being paid attention to a lot closer. So I think the instances of manipulation are probably decreasing. That being said, as we go further down the tail of longer tail assets, the sophistication of holders generally starts to go down slightly also. So you're not going to see as many major institutions holding balance sheet items of Solana as they are Bitcoin, as an example. It's more you and I holding Solana, hoping to God that we make money. I don't hold Solana, full transparency. But so I think it's people like, as we go further out on the tail, I think it's a little bit more improperly planned leverage, I think, for a lot of people. And so that's probably why we see a greater proportion of the market cap being liquidated, because it's a different caliber of.
Yeah, it's just kind of sloppier risk taking, I would also say one reason why manipulation might not be the best explanation, even for the action in the tail over the last couple of days, is just because the market moves can explain it themselves, right? And so I think if you're looking for manipulation, you want to look for some crazy price action on a tail coin that is different than the price action in the market.
Yeah.
It's
kind of like the tide that raises or sinks all boats, right? Like it's
So That's probably the best explanation this time. The last couple of days, markets were just moving and people had leverage positions and they got liquidated. So I don't think we need to go to manipulation, but if you want to look for manipulation, I think that's what you would look for. You would look for moves that are independent of market moves.
Yeah. I mean, to sum up, I think you can't necessarily strategically plan to avoid manipulation unless there's specific venues that you know are problematic. All of that being said, I think this just highlights the importance of risk management in general, the importance of understanding leverage if you're going to use it, and what the stop gaps are and how to offset your exposure to the downside with options or something like that. But there's some really cool things that you can do to hedge during these environments. What it doesn't show you is how much of that liquidated value was actually hedged. Maybe a lot of it. Those institutional investors in Bitcoin, I'm sure, have hedging strategies or risk management strategies well beyond retail. Okay, one final thing on before we wrap up here on Ethereum. So ETH has fallen below 3,000, which to many people was a really critical support. I don't subscribe too tightly to TA personally, because I think, unless you're an actual expert on technical analysis, it's like any version of statistics. It all depends on where you put the time bounds. It can say different things based on what you want, using specific cherry-picked data. Anyways, for whatever reason, 3,000 was a critical support. ETH is still seeing all-time high of wallet activity, all-time high of volumes, all-time high of revenues, all-time high of developer activity. Like, ETH is hitting every major metric. They just had a massive upgrade for proto-dank sharding that went off without a hitch. Are you concerned that it's fallen under 3,000? Do you think that support was as critical as it appears?
Well, so first of all, I don't think it actually did fall under 3,000. I'm looking at the price chart just to make a minor correction here. I think the lowest it got was about 3,200.
Just quoting from the article, but yeah, that's what it looks like on CoinGecko too.
Yeah, maybe there was some trade that pumped it down, but I don't see it on the chart. Yeah. So it's not that low. No, people maybe listening are panicking. I don't think it actually went below 3,000. But I'm not that worried about ETH in the long run. So I wouldn't, I'm not considering selling any of my ETH when I see this price action. My ETH in particular is something I want to hold for the long term. Frankly, it has been a little disappointing that other things have gone up. So, I mean, ETH has been a laggard, honestly, this cycle.
Percentage-wise, yeah. I think that's actually a good observation. I hadn't really thought about that. Percentage-wise, I think ETH has probably not been as exciting as many of the other assets, including Solana.
I mean, Solana's like almost 18x or something off its lows. Avalanche was a 5x or something, and I think ETH barely scratched like 2x.
Yeah, I'm not entirely sure. I remember getting down to, I think, 1,000 or 1,200 or something in the bear.
Yeah.
I'm not sure, but either way, I mean, ETH to me is a multi-cycle asset now. I think people just have a better understanding, a better expectation of its value going forward. We're probably going to converge on similar volatility to traditional tech markets as some of these protocols start to mature a little bit. I think Bitcoin is only going bananas because of the ETF, in my opinion. And ETH has just kind of done what is expected of a blue chip, in my opinion.
I mean, ETH still sets the standard in terms of the tech. Like, most of the interesting research is happening within the Ethereum community. And then, you see these things, we've talked about this before, like EigenLayer built on ETH. Obviously, the first L2s were all, using ETH as the base layer. And even things like MEV, all of the original MEV research was on Ethereum. And then you see it kind of spreading out into other ecosystems. So Jito on Solana now is a big kind of MEV extracting tool. But that was, that's based on some insights that fundamentally came out of research in the Ethereum community. And so with Ethereum, I don't think you can turn that off. It's going to continue to be kind of the center of innovation and research for the space.
If you would have asked me about that specifically a couple of years ago, I probably wouldn't have had similar conviction as I do now. It wasn't as clear that ETH was going to be able to continue to advance and iterate the plane while flying. Backwards compatibility was something that was really unknown, to be honest, until ETH has really started to work on it. But now they've gone through all of the upgrades to proof of stake. They've gone through this proto-dank sharding. They've added all these L2s. Performance has increased significantly. Congestion has decreased significantly. Gas costs have decreased significantly. They're doing all the things to the extent now where I completely and wholeheartedly agree. I think ETH is here to stay. It's going to be kind of one of the main staples of the space where research and innovation are probably at their greatest. I'm totally with you. I think long-term, same thing. My view here on Bitcoin, ETH, and alts is now it's just a good time to buy. There's nothing in the markets that tell me that it's over. Again, I don't know any of this with certainty, but yeah, it's a good buying opportunity to me.
Yeah, definitely not financial advice, but I have the same instinct when I see these big market downturns. I look where my limit orders are sitting. So I do have limit buys in if it goes down enough. So that's, I think of these as buying opportunities. To be honest, right here, I'm not a buyer. It's still, we have to remember how quickly it came up. I mean, the prices where we are today are the same as a few weeks ago or something, right? So we've gone up and kind of come back.
Last week.
Yeah. So I'm not a buyer yet, but I do have limit orders, and if things go down enough, these are buying opportunities.
Couple strategies. Mine is kind of blind time cadence. I usually just buy things generally on a cadence every couple of weeks or every week, or I put orders in. Some people do like you and have limit orders at certain levels that you think are great. At the end of the day, what I hope people gather from this conversation today is that you need to have some sort of strategy. Whatever it is, you need to have a strategy that's verifiable, that you can point to, and that keeps you somewhat objective in terms of how you're buying and selling. Could we see, to sum up, a lot? You and I were talking before the podcast started, but could we see even more volatility leading into the halving? And the answer is yeah, in my opinion. Some of this stuff this week and today, I think was caused a little more by macro than it was by the halving in general. But halvings can be wildly unpredictable. There's been a few of them in the past, and it's hard to predict whether the price is going to continue to increase leading into the halving, or if there's going to be a major dump before because people are expecting a dump. It's really hard to predict. So long story short, be very, very careful. If you're buying anything right now, make sure it's not short-term trading. If you're buying anything, make sure that you're committed to it and willing to hold it for a little bit of time.
Yeah. I would also say, just quick little plug. I mean, as these financial markets mature, you are going to see more things like derivatives and things like options become available. So again, not financial advice, but there are very interesting ways to use options to trade the volatility. You don't even have to take a stand on the direction. If you think volatility is going to be high over the next few weeks, there are several different kind of options positions you can take that pay off if realized volatility is high, right? It's not a directional bet, but you can also, if you're worried about some of these moves, if you're worried kind of how far down they're going to go, but you want to hold on to your long position, it's very easy to hedge your downside position with put options, for example. So I would just recommend people go to @AeroMarkets, the Twitter, check out the community, engage with the community. People are talking about different strategies for trading vol and so forth. And, again, not financial advice, but I recommend if people are thinking about how to navigate these high volatility markets, go check out @AeroMarkets and look at what some people are saying in the community over there.
Beautiful. All right. that brings us to the end for today. We've gone over time a little bit, but that's okay. We are a live show Monday to Friday, 12:30 p.m. Eastern, at least for the time being. That's the time. This week, Ceara's gone, as I mentioned at the beginning of the pod, to Lisbon, I think. She's in Europe somewhere. And so Patrick's going to join us for the remainder of the week. So we've got a few more times for all the people watching live. Appreciate y'all, as always. You can, send in comments, questions. Our production team, when it's not just me and us, we monitor those and try to respond in real time. And if you disagree with us or something, please let me know so that we can have a discussion and try to explore multiple perspectives. Anyways, hopefully everybody has a wicked Tuesday. Go touch some grass. Don't focus too much on price. It's not over. We're still early. With that, I say to you, Patrick, today, go FUD yourself, my friend. Later.